Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. We got a great show lined up for you. I'm Harvey Freed. To my right, Becky Alley.
What is going on, everybody? Happy Saturday. It's a beautiful day. I'm waiting for the summer to hit us. I need some warmth on this skin right now.
Right. And the full moon's out today.
Yes,
so
the full moon, yes. Full
Lisa
moon in
Loss.
Libra, everybody, for my astrologers.
The great Lisa Lawson over here to my left. Hey, Lisa.
Good morning, everybody.
What's going on? And the guy you brought in, this Nick Casteel, has been with us before. Find New Keys, Real Estate. Hey, Nick, what's up?
Hey, how you guys doing?
Fantastic. Always love talking mortgages and real estate. 1 hour to get everyone's morning here started in Southeast Michigan. Kick it up here. 97.1 The Ticket, of course, allows us to bring you this great information. You can always reach us personally here at the studio or at the office. At the office, 1-800-LOW-RATE. You can just ask for us by name. Here in the studio, the 97.1 number and the ticket text 248-539-9797. Always answering questions on mortgages and real estate. We get in here, Nick, and we start asking questions to each other. Hey, can we do this? Can we? Because the guidelines sometimes have a little bit, at least you'll give me some information on this, have a little bit of wiggle room sometimes on the guidelines, or sometimes you just got to figure it out.
Sometimes they're slightly ambiguous the way they're written, and you really have to, it's not that there's wiggle room. Underwriters have clearly kind of deciphered what this all means, but if you've not read it before, if this is your first time running into a situation, sometimes it's not cut and dry. It's not like yes or no, and you kind of have to dig through it and figure it out sometimes. It's not as black and white as people think, but underwriters think it is. And we fight all the time for our clients.
Yeah, sometimes things are underwriter discretion too.
Yeah.
It depends on how they're looking at it. Yeah. And, ultimately at the end all be all decision is all around avoiding foreclosure. And if we're audited, so all the things that we're asking for, that's ultimately what the end goal is. We're not asking for additional pieces of paper that we don't need. There are shades of gray, but like you said, it's up for interpretation in some of these things because they're written in a vague format where you're like, okay, well, I'm interpreting in this way. How are you reading it? And then sometimes it's a meeting of a minds to be like, okay, I can see what you're saying and we can make a decision on that.
And sometimes they got to call the authorities. I mean, I just had one that they kept coming back saying, you can't use child support. You can't use child support. And I'm like, yes, you can. They're like, they haven't received it in the past 3 months. And I'm like, FHA allows a 12-month average in order to qualify because it was inconsistent. And she's like, yes, but you have to have it in the last 3 months. And I was like, I don't mean to be this person, but can you please call FHA? Please call the Federal Housing Administration and get clarification. And sure enough, I was right. Underwriter was wrong. So agents understand, hopefully, that every loan officer wants the loan closed. Nobody takes a loan thinking, I'm just going to waste my time for months and months and months and not close it. We all fight all the time. But sometimes things don't go quite as smoothly as we hoped, and sometimes we got to do a little nudge or do a little push or and make sure that the right information is getting out there. In this case, it was almost $300 a month of income that they cut for me. And I was like, nice try, But that, that was a 3-day back and forth process to get that fixed.
And the part of that too, though, is, the due diligence that we do up front when we're doing a pre-approval, like the days, and we talk about this week in, week out, day in, day out, the days of I want to find a house, then have my credit pulled, then do all the things. It's over smart. Because if you didn't do your due diligence up front, if you didn't have a bona fide pre-approval, if you weren't working with this buyer, with I'm assuming probably for months, they already have that guideline looked up, all the things, because those are, when we're doing our discovery, when we're having these initial phone calls, we're looking at those things. We're not only just looking at your credit, but we're looking at the income. And just because you told me something verbally, in your mind, you probably believe that to be true. Right. But then once we see the income, once we see the pay subs, are you working 40 hours and I'm seeing 3 pay subs, 38, 37, 36, 40, 40.
No, you're not.
That's considered a variable income in the lending world. And that's a whole different kind of
and these aren't
calculation.
Things, and I tell people, and I tell the agents, it's not like the borrower is trying to intentionally deceive me.
No.
A borrower who's working 37, 38, 39 hours a week fully believes that he is a full-time employee. He thinks it. And he's not. The underwriter goes, well, that income is a lot different than someone who's always working 40 hours. And you're like, barely. But if you do the math, it's somewhat significant. Depending on your hourly rate, it could be $100, $200 less, once it's averaged out. That makes a big deal sometimes in an approval. So we do all the due diligence. And like I said, you give me one paycheck that shows 37 hours, but all the other ones are 40. And I say, hey, what happened? I had to leave work early sick that day and I just took it unpaid. That can be an LOX if I have 3 months of 40 hours a week. You know what I mean? The underwriter's going to be like, hey, we all get a little sniffle and whatever. But you can't be sending me ones like she said, 37, 36. Then you had overtime on one of them for an hour. I mean, it's still inconsistent. It's
Nick,
not
what we're
considered.
getting at here, we're just sort of undercover. What we do is get
You guys are on fire. You guys are on fire. Yeah.
We're like little ninjas.
Way before the client calls me or calls you, Nick, and before they even consider the home buying process, there's a lot of counseling that could be done ahead of time. Like,
sure.
look, you're going to be buying this summer. Let's do this, and this. You've maybe undisclosed money. Let's hurry up and get that money deposited into your account so that it's already been there, and we're not going to be seasoning your funds to close, getting your hours back. Again, you're going to buy a house next month, and sure enough, the month leading into it, you were sick, you took a vacation pay, your your date doesn't match up. A lot of things can change quickly. We can sometimes help avoid some of these issues ahead of time.
Yeah, I mean, it's all about
It's coaching.
transparency. We need to be transparent with each other. And it's the same with the buyer's agent, with the seller's agent. I mean, there's only so much we can share with the selling side, but it ultimately boils down to the buyer has to be fully transparent with whoever they're using, for their lender, because it's going to come out. And how you're looking at things and how we have to look at things. It's a have to, right? It is what it is. Like there's these little boxes we have to stay in. All of it's regulated. Again, there are some places you can move around in shades of gray, but it all ultimately has to be a well-qualified buyer. And when we're looking at your income and we're asking for these things, it's to set you up for success. So when you are under contract and your agent, like when Nick, you finally 6 months later, you're under contract, you have the house, we need to make sure that we can get to start to finish A to Z as quickly as possible. And a lot of that work happens when you're with a high level loan officer like we are at Capital Mortgage Funding. We've done our work up front so that way we can just move the vehicle to the finish line.
It's really easy. If you do all the hard work up front, then it's just a couple updates. It might be that it took you 3 months to find a house, but I don't have to go through this process every time. I need a couple updated pay stubs, and communication is key. I've had borrowers be like, oh, well, they cut my hours at work, or I decided to go back to my old job. Like knowing this information up front makes it so we can deal with it. It might not even change your approval. It might improve it, but the secretiveness, you know what I mean? And I think sometimes I've had clients get coached by others saying, oh, don't tell them that. Don't do this. Well, it always comes out in the end, let me tell you. As I'm sitting at a closing and I see somebody with a folder from Gardner White, because that's where they put all their documents for the furniture they just bought, and I'm looking at him, he's like, don't worry, it's in my fiance's name, and he's the only one alone. Hey, cool. But had your name been on it, that could have been a problem. Just be upfront.
Yeah, so
as transparent as possible. Our goal here is to get you closed.
Yeah, so what Lisa's saying is, when you're part of like that transparency and
We can coach you.
You're buying the furniture for the house that you don't own yet, okay? And if we are really, really thin on getting you qualified, because let's just say you are a dual income household, but only one of you has a qualifying credit score. So now it's showing up as if it's a very tight kind of debt ratio. So how much money you have coming in versus what you have going out. But that's not really the truth. However, if you were to go and buy the lease or get the furniture, that could explode everything where you no longer qualify. So it's really important that you do not open new debt, you do not open new credit, because while we
Don't
can do
increase
all
your
the
trade
work
lines.
up front, the littlest things could make things explode, and then we have to pivot so the deal doesn't perish. And we're very good at that, but we would like to avoid it if we can.
Right.
For sure. Hey,
It's
Nick,
a lot of undue stress and unnecessary stress.
Nick, there's no doubt 50% of the clients are really easy to get a mortgage. They can provide their easy documentation, their salary, employees' credit's good. Those are the easy ones. The other 50% of them is what we're talking about here.
Right.
But let's bring you back in here and talk about the collateral, the house itself.
Yeah.
As you're throwing people in the car, you're hoping already at that point, like all this stuff we're talking about here, that's already sewn up. And you've got that confidence. And like when you work with Lisa, that if you do find the house and sign the PA, you can write 30-day closing because you're going to close on that on time.
Well, that's why it's so important to work with professionals. So important to work with somebody that, like, when you go to write that offer, you can say, look, this piece of paper isn't just a piece of paper. Let me tell you what they do. And then you get into it. Look, they aren't just people who just read one email or just listen to the person. I can't tell you how many times when I'm representing the listing side, when I've said, look, there's 3 offers, this offer, this, and this offer, this, and this offer, well, or on the other side, when I'm selling my buyer, it makes it so easy to say, look, you don't understand. Lisa I know her. She looked over all the documentation. They cross their T's. They dot their I's.
We get our verification.
Yeah. They've actually done this. And that stands weight, especially if you can get the agent to explain it to their clients. And then you can possibly save $5,000-$10,000 or other terms, or get the house over somebody else.
You know,
Right.
having the buyers be really confident is the whole key.
Oh,
You
yeah.
know, and it changes everything when they're willing to make the offer. I'm willing to pay $5,000 or $10,000 more and get that house because my confidence is already there. And that's one of the things that I think we do. The old timers definitely are instilling more confidence in their buyer. Again, 50% of the people out there are really easy to work with. 50% want to know, 50% don't want to know. It's a 50-50 world nowadays.
Not everybody wants all the detail. I'm cool with that. I'm a detail-oriented person, and I probably sometimes I've said this before, I probably give too much information. So some people maybe feel a little bit overwhelmed, but I would rather give them the information. If they choose to, it's too much for me and I don't want to go through, that's okay.
Mm-hmm.
You know what I mean? But I would rather everyone have what they need to know up front, and this is how we go about this. And, you can qualify for this now, but if we tweak these little things, or we pay this little thing off, or we transfer this debt to this 0% card that you already have, then we don't have a payment, you know what I mean? Or a lower payment. There's so many other ways, I hate to use the word manipulate, but to manipulate the numbers to make it work for you. But again, transparency, tell your loan officer everything. They can
When you
help
have the
you.
information
Right.
and then you have all the knowledge, now you can put it together in a
Correct.
way that, makes you more qualified or makes you better or helps your interest
And I have
rate.
to say, I don't know if you've noticed this, but I've literally seen a few pre-approval letters, not ours, obviously, but it was at an open house recently, and the agent was showing me the other offers that they got. And I'm looking at it, and I actually read through it. It said pre-approval on it, and I'm reading through this, and I'm like, this is just a pre-qualification. She's like, what do you mean? It's a big bank. And she goes, it says pre-approval. I said, did you read what they said? Read the letter. Agents, read the letters, because the words pre-approval doesn't mean pre-approval if it clearly says, we've pulled credit, had a conversation. This is, based on documentation. Once the bar, and it literally says this approval will be, whatever, solidified or whatever, based on verification of the information supplied verbally by the borrower. Meaning, I go, and I even asked the borrower, I said, hey, I'm going to use the initial J because it's just happened and I don't want to call him out. I'm like, hey, did you get anybody else pay stubs? No. Well, how were you getting a pre-approval if you've given no one a pay stub or no one a W-2 until you talk to me?
Well,
so you have to be super careful in how these are worded, and they look very legit.
That's why
but they're not. It's just a
sometimes are
prequel.
we're not the first call, but we're the last call. And what you're describing is when someone's under contract, things are exploding. Because once they hit underwriting, and the unfortunate dirty secret, and again, nothing out there for anyone bad, but there are some loan officers that don't know what they're doing, and they're waiting on their underwriters to catch certain things. Whereas, when you're like, again, I hear a high level loan officer, we already know what the problems are. We're seeing the problems. And to the consumers out there that are looking to buy, you have to kind of get off the fence of that fear of having your credit pulled, because that is what is going to allow us to answer the questions that you don't even know you have, and help us really, really detail the path of home ownership for you.
Good point.
Guess what? We're up against our first break. We're going to give it to you all morning long here. That's right. 1 hour of the Hardcore Mortgage Real Estate and Business Show. Come and join us. 248-539-9797. We'll be right back. We are back live here in the studio.
It's horrible.
Well, that was a quick break. 248-539-9797. We take your calls here. It's the Hardcore Mortgage Real Estate Business Show. We are brought to you by Capital Mortgage Funding. Call us at 1-800-LOW-RATE. Of course, always powered by CMG Home Loans and MLS 1820 Equal Housing Lender. And Nick Casteel joins us from Find New Keys Real Estate. Nick, you've been on a few times. So, we get into this mortgage stuff and we start uncovering things, and it gets a little scary out there, but it's all for the client so that they're prepared to sit down and get in a car with you and really start looking at homes, because today's market it's very competitive. Let's go there and talk about that inventory. Yeah. If the house is nice, Nick, it's multiple bids still.
Yeah, for sure. Especially, under 300,000, multiple offers. I think the hardest thing right now is a young, and I know, family, we're not allowed to discriminate or whatever, but that person who wants what you consider the normal home, the 3 or 4 bedroom home in a decent school district, and they can only be approved for $300,000 or $320,000. That is the normal person going out and trying to find a home right now, and there are so many of them. They're gone. 10 offers, 8 offers. People are bidding over. And they aren't even in good shape. They're not. There's no homes. Mm-hmm. There's just no homes.
These were the 220 houses that just 5 and 6 years ago, pre-pandemic, that were about 220, 215. Yes. They needed some love, but they were starter homes. They were affordable, so that if we got a younger family in there with not a lot of resources and money, they were able to improve things. They could put a new furnace on. Maybe they were saving up for a new roof, getting prepared so that they would live in the house 3 to 5 years and let the equity build. That house is 310, 320 now.
All day.
Yeah, and it's there's a lot of cash still out here right now. I mean, so I have a lot of my buyers that do have some assets. They're probably the step-up buyers, we would describe them. They have a house to sell. But I had a couple where we had to run simultaneously for a cash deal. And, we had, this contract is given to me. We have 7 days to close it. And if we don't close on the 7th day, someone's writing a check for cash. So
that's nuts. You got it done.
Yeah, we got it done. And that's where, again, you have to be prepared. But I got that contract and I was like, all right, we're running now. But there's a lot. You have to be creative to be, to deal with this competitive market. But the truth is that it's been competitive for the last 5 years. This is something that we should be accustomed to.
We've been singing this song for a while now. Yeah,
yes, for the last 5 years. Yep. So, and it's not going to stop because there is a lack of inventory. So until the builders start, kind of catching up with the inventory and some of the, existing home sales, where they're going to start, releasing these golden handcuffs of equity, and they're going to start listing their houses a little bit, more. We're going to continue to be in this, predicament. But the first time buyers are the ones that are really, really kind of getting beat down the most. And I feel like there's a lot of, I call it the birth lottery, right? Where the parents are stepping in and helping them with some assets. That's helping some of these first time buyers really kind of separate a little bit. If you're able, if you're blessed enough to have that. Yes.
Yeah. More, the statistics have been out every single year for the last 3 years. More and more percentage of that first-time home buyer has had the parents or a relative step in.
Yeah, yep.
I mean, at some point, it's up to 80% in some way or another for the first-time home buyers. But that goes back to having your ducks in a row to begin with. I mean, we've been singing this song all morning, right? You have your ducks in a row, so you know what flexibility you have, whether or not you can switch to cash, whether or not you can switch to a higher down payment, whether or not your parents can write a check for, if it doesn't appraise or whatever the case may be.
Can they do a guarantee? Yep,
yeah.
Exactly.
What options are out there, and you don't know what flexibility you have until you talk to people who are professionals and say, in this house instance, to get the house, you talk to me, and I say, to get the house, you got to do X, Y, and Z, and then you talk to you, and you say, well, this is your flexibility on the lending, and then you can go back and say, all right, I can tap into my 401k, or I can, tap into mom and dad, or whatever the case may be. This is all about getting your ducks in a row and having professionals and coming up with the best scenario for you.
Yeah, what's the cliche, prepare to plan or plan to fail, or
whatever
exactly. It goes, or prepare to fail.
Yep.
And it's conversations. The conversations aren't locking you into one thing or another. It's a discovery conversation. And just because in your mind, you're like, I'm going to go down this road. And then you talk to a lender and it's like, and we are trained, we're skilled. We've been all doing this for 2 decades or more, where we're looking at it, be like, and we have to say, no, that is not the clear path of home ownership. You have to go this way. Our job is to find the thread, draw a straight line from you to that house, whatever that house is going to be, however you're going to get there, and what does the money look like? And there's oftentimes, on a side note too, I feel like there's a lot of people that are not keeping the money in the bank. They are, they are getting paid and they take the money out. And I said, where's your funds for closing? Oh, I have 10,000. Okay, where is it? I don't see it in these bank statements.
In a safe at home.
I took it out because I didn't want to spend it. And so if you're one of those
willpower people, though, I have to say
bless
I'm
you
impressed because most people would spend it if there was cash.
And this is so, again, if you're one of those people that fear the banks or you are not disciplined for whatever the reason, or you don't trust yourself, fine. And you keep that money out of the bank, that's going to be an issue when you are trying to buy a home because we have to see verified funds. And part of that is being in the bank. If it's going FHA, we have to see it in your account for 30 days. If it's a conventional loan, it's 60 days. So you can't just take this 10,000 that's been sitting in the bank for 3 years or in your safe for 3 years and then just shove it in someone's bank account. So that's where we also have to be like, okay, is there someone that can gift you this money now instead because we don't have enough time to now verify these funds.
We're always talking about funds to close and the different nuances of a mortgage. But of course, in the mortgage world, we're sort of predicated on what goes on in the world. And of course, interest rates have been effective over these tariffs recently. And,
I don't want to talk about my investment accounts.
I
do not.
Either way, again, we all support the United States and we want things to go great for us, but it doesn't always work out great for interest rates. The corporation sent out a mass email are saying, hey, everybody, the interest rates have dropped to the lowest level since.
It was a hiccup.
6 months.
It was, hurry up and refinance. So we were taking all the calls all week.
And literally the next day they started skyrocketing.
So this volatility is real in the marketplace. And the chaos around the stock market, it used to actually benefit, or the bond market, sometimes it would benefit mortgage interest rates. No, that ship has sailed, that's for sure. The market's been losing ground. We all know that the stocks are lower, rates are higher, but with that being said, they're still relatively better than they were sometime in the last 24 months. And there is some windows of opportunity. We get a lot of families that are doing cash out refinances, which typically has a little bit higher interest rate than a rate and term refinance. So a lot of you might have took some cash out last year. And now the clients are calling me back saying, Harvey, is there any break here? And just the fact that, again, they're just going to do a rate and term or maybe drop from a 30-year mortgage amortization down to a 20 or 15. Those opportunities are there, least. So we do have opportunities for families out there. If you've got a lot of debt, we'll go into the debt consolidation conversation quickly. Becky, we've helped so many families just get back on your feet. Sometimes you just need some money to pay off debt and really do that home improvement.
Yeah, I refer to it as resetting the baseline, and, taxes, if your payments being, reassessed and you have the escrow shortage, there's a million different reasons why someone might need to tap into the equity or whatever they're doing. Right now, I'm doing a home equity line of credit for someone that's renovating their second home because we looked at the analysis and it made more sense to do a home equity line of credit. So take out a completely second mortgage and then leave their primary mortgage alone because of the interest rate and the combined, payment and what their long-term goal is. But then there's other times we look at it and it doesn't make sense to do something like that. It makes more sense to forego maybe a little bit of a lower interest rate, take out a high 6, low 7 interest rate, clear all that bad debt and then start it over. So it all is situational. Every mortgage is situational, whether you're buying or refinancing or whatever it is. But again, I cannot stress enough. It's all about that conversation, that discovery call of what are your goals? What are you trying to do in 5 minutes? But more importantly, what are we trying to do in 5 months, 5 years down the road? So we can make sure that we're setting you up for success and we're not just doing a now, like taking
Band-Aid.
a now Band-Aid that's going to kind of be at your detriment in the next couple of months or 5 years.
And don't forget, because, yes, interest rates are, a little lower now, but, higher overall than they were 5 years ago. The properties, equity, typically have been able to support this because property values have been going up.
Yeah.
Inventory levels are low, and because of that, property values have continued to climb. So you know what? That property that was $300,000, that's now $500,000. That's a lot of people's store of wealth. So they can tap into it when they need, not that they have to or not that that's the best, but sometimes that's the only option and it's there for people.
Yes.
Don't forget it's there for people. And if you don't know what your property's worth, contact a professional. Like that's something I can tell you, I can have a little conversation, all day long. And then, there's so many people that are in these situations that don't realize they're sitting on $200,000, $300,000, $400,000 of assets right there. It's in one pocket. You can shift it to another pocket and drastically change your stress level.
Yeah, I mean, so like the equity, it's tangible. It's like just because you can't see it doesn't mean it's not there. And to kind of put in perspective, the person that bought a $200,000 house last year will say, and if even at 5% appreciation, you did nothing but stop renting. And now you have an instant $10,000 in equity in that home just because there's a 5% appreciation, just to kind of put that in perspective. So, and in some cases it's more than that. Like you're talking about, like there's a couple $100,000 or a couple $100,000 in equity that someone can tap into to reset the baseline, keep their assets alone in
Increase
the
their
401k,
cash flow.
increase the cash flow, and then you did nothing, but your payment stays the same, and now you're saving $500 a month.
And live, and you don't necessarily have to sell, although
Correct.
sometimes you should. It's all.
We'll come back to you, Nick, on that for sure.
Yeah.
Up against our second break here. You are listening to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. Give us a call live in the studio, 248-539-9797. We've got all sorts of topics. The Triggerly legislation, our home funded program. We're going to talk to Nick about the inventory and a whole lot more. Keep it here on 97.1 The Ticket. We'll be right back. Welcome back to the Hardcore Mortgage Show. 8:30 and a gorgeous day in Southeast Michigan. I got a great afternoon going on. I hope you guys too, and get out there and start that spring cleaning up. And again, if you're going to list your house, Nick Casteel, if you're going to list your house, what a great day to pick up the perennials and start bagging it. I know that I don't want to say the wrong garbage company, but they're coming up and picking up my yard waste already. They just started this week. So definitely it's time to go get those disposable, the brown bags. And
Curb
fill up-
appeal, the number one thing you can do
Yes.
to increase the equity.
Yeah,
Nick,
shout out to GLC real quick. They handle my landscaping. They are a great company. And
Are you already looking pretty?
Yeah, I mean, they did my yard and all the things, and they're going to be coming to my house on Monday to do the mulch and get that all spruced up. So shout out to GLC.
I love that. Again, it's been a little tough spring starting things off here, but I'll trade in this wishy-washy April for a really solid May and less rain. It can rain, just rain at night.
I mean, that's like April's
I mean,
norm, right?
yeah,
April
it's like, and then we
showers.
get the normal snow, like the April random
Yeah.
snow that took place.
We had that. Yeah, we did have
We
that.
got it. So now we're done.
Yeah, we got it. Yes.
All right, Nick Casteel joins us. If you want to call in, Nick's a great real estate agent, of course. 248-539-9797, live in the studio. Give us a call. Talk mortgages, real estate. Lisa Lawson to my left. Becky Alley. I'm Harvey Freed. We talk mortgages. And we have a program coming up tomorrow. Of course, Becky, you're going to be out at the old Ultimate Soccer Complex in Pontiac over there, owned by another entity now. I just don't want to drop their name on there, but it's at the UWM Arena out there in Pontiac. And we're going out there to do like another bridal type show where we can help a lot of families. The home funded program is a real winner. And again, not everyone has a silver spoon or has the family and the parents and the wealth out there. So we're saving. We're a blue collar. We're a blue collar town anyways.
Yes.
We need to save some money to purchase the house. In conjunction with that money that you can save or the wedding gifts, the home funded program's great. And we throw that down with the down payment assistance. Folks, you guys are homeowners and you're not renting. It's really uncool to get married and not have goals and dreams. And one of them should be home ownership.
Yes. And so the home funded is exclusive to us here at Capital Mortgage Funding, powered by CMG. And it allows a crowdfunding where instead of you guys, instead of getting your typical wedding gifts, people can gift towards your down payment for a home. These funds do not expire. So whether you're getting married in 5 years, you can start this campaign as soon as possible. And we're looking to, we're going to match dollar for dollar. Was it up to $2,000 now?
$2,000. Right.
Yeah,
We'll
up to
give you
$2,000.
$2,000 also for
Yep,
free.
and then we're also affiliated with up to, I think, 1,300 retailers where you can even, if you're buying something at Home Depot, for example, a family member, friend can say, okay, I want XYZ of this purchase to go towards their down payment. It is mindless. It's just you doing natural shopping that you don't have to do anything other than you shopped, and now you attach the 50% that Home Depot is willing to contribute towards their purchase of a new home. So it's all about being creative and finding these solutions for home ownership. And so I'm going to be there from 12:30 to 5. Come in, have conversations. Let's really set you up on how we can be creative with those wedding gifts, because ultimately it's not if someone wants to buy, it's how. How are we going to buy now? It's not do they want to buy, it's how. It's when and how are we going to get there? And we have to be really creative with some of the lending solutions, because it's not the payment. We can really quickly identify what someone can afford, but where is the money coming from? That is a general, consistent, constant conversation. And there is more funding programs, down payment assistance, forgivable, not forgivable out there than there has been in the history of ever. And I feel like you're really good at this, Harvey, too. Like, our job is to lead this industry better than we found it. And
Good stuff.
when I bought my first house, I wish someone would have educated me on what truly was available. Maybe it wasn't available when I bought my first house, 20 some years ago or whatever, but it's available now, and I'm in the driver's seat and we're all in the driver's seat. So we want to make sure people are aware of what really is out there. Whether you're a first-time buyer or not first-time buyer, you have access to funds. And if it makes sense for you, we want to make sure that you're aware of it.
Yeah, my first house was $74,000, so it didn't. I was able to save the 3.5. I went FHA and that, but had I known these programs were out there, maybe I could have stepped it up a little bit. I only had so much saved back then. So great program. You'll see Becky out there again at the old Ultimate Soccer Arena out there in Pontiac. If you've ever checked that out, she's cool to meet, and we got a cool program. If you're just getting married, or even if you're not, Home Fund, it's a great program, and it's exclusive to us. So a great way to save money. All right, Nick, let's
Many
talk.
clients use it. Absolutely love it.
Yeah,
it's a
cool.
no-brainer.
No-brainer.
Yeah, they're like, hey, what's up with the toaster, right? And like, no, like, hey.
I got 3 toasters here. I don't have a house. I rent, but I
Yeah,
have 3
so now
toasters.
to be like, wow, look at me. The whole entire family helped me buy this house. What a cool housewarming moment. That's cool.
Awesome. Then you can have another party at your house and invite all your friends, and
Yeah.
they can fill you up with the toaster oven gift.
Yes.
Let's talk about inventory out there, Nick. Wow, the spring of 2025. Here we are.
Yep.
I see that more and more listening. I'm starting, again, the agents I spoke to this week, the few are coming up. Let's talk about one of your great listings you have right now.
Yeah, so we just listed less than a week ago. We put it right on the Clinton River. It's 1,700 square feet, got a master bedroom that literally looks up and down the river. You can see boats coming across all day front
That's
and back.
fun.
It's
Yeah,
very pretty.
it's so cool.
That's pretty.
Yeah, and it's like a maybe 15-minute boat ride right to the lake. You can go anywhere.
Keep the boat right in the backyard.
Keep the boat right in the backyard. It'll fit a couple 40-footers, yours
Really?
and one of your
A
friends.
couple 40-footers. Okay.
Yeah, I mean, yours and one of your friends. I mean, honestly, the river, if you want to see boat traffic, is the place to be. You don't want to be on the lake because you're not going to see it. It's going to be
anything, yeah.
out there. Yep. So if you want to see boat traffic, you want to wave at people, you want to be on the river, and this is it. So, we just listed that. That's an awesome listing.
Talking about that one.
A gem out there on
Yep.
St. Clair.
You can
That's a
fish
good
from
one.
a dock, like right there. Like
Yeah,
it's gorgeous.
you can fish right from your dock. There's a video online. Check us out. Find New Keys. It's on, Facebook, Instagram, whatnot. You can see the video of the property. Call us if you have interest, but inventory is low. Inventory on water really low, and so that's the name of the game right now is inventory. It doesn't exist.
Okay, and the good ones obviously are going to go really fast.
For sure.
Constantly are hearing this, some overbidding and stuff. I heard of one in Huntington Woods last week. I had a client call and say, Harvey, I want more of a house. I want more. I'll sell mine in Huntington Woods. I want to upgrade. And I think it went for $90,000 higher than the list price. And sure enough, it was a cash offer. By the way, these cash offers, eventually these folks get mortgages. They close with cash. And they're generally backtracking and saying, wait a minute here, I got to pay my parents back. I mean, we're in the industry, folks. We see a lot of those.
Yep.
Well, cash still takes 2 weeks anyway.
Yeah.
And so if you can set yourself up for financing and you can,
in an extra week.
so because the truth is this, right? If you're using your 401k, we see what's happening to everyone's 401k. I refuse to look at mine right now because it's upsetting. But if you can now, if the option that you're going to take out of your 401k, once you take that at a loss, it's a loss.
Correct.
And that's the truth of the matter. So if we can go side by side and get you financing for 20% down, you don't have to deplete your portfolio. Why would you not do that? Because even a cash transaction takes 2 weeks between the moving and the shoving and whatever happens.
Title.
Well, you want to get title
yes.
insurance. You're making sure you're paying cash for a house. You want to make sure that there's no liens in the property.
Yes.
You're doing your due
So,
diligence takes 2 weeks.
Financing
typically,
right now is going to be cash is not king. I feel like for a minute here, you need to talk about, how we can make the financing work for you, especially during this, whatever's happening right
And
now.
I don't get it. I just had somebody lose a deal, and Nick, maybe you can speak to this. So
Yeah,
they would have made $10,000 more had they taken the financing. But the seller's like, we're just going to take the cash. We don't want to take any chances.
That's
and I'm
ridiculous.
like, but you could have made $10,000 more, like in my head. And we're talking about, this was a very high level borrower, conventional 20% down. We weren't talking, actually, I think they're 25% down. We're not talking about somebody who's doing like a, marginal type of loan. And I'm like, so you would rather, I said 2 weeks versus, I told them I close it in 3, so an extra week. Because they had a little bit of an inspection period. They needed a few extra type of inspections they wanted. And I'm like, you'd rather just walk with 10 grand less. I don't understand why.
Well, usually
What's the scare about any type of financing?
Yeah, I mean, usually when we're presenting offers and we're representing the person who's selling the home, or on the opposite side, when we're presenting offers and representing the buyer, we try to emphasize there's so many terms involved with a purchase. The buyer is always thinking, there's, just tell them, give them 800 and that'll beat the 790. But normally it's not one thing that wins a deal. So it's normally not cash versus conventional. Does the cash always win? No. In fact, I just talked to somebody, one of the agents in my office who sold his own personal home yesterday, and he came into the office and he said, Nick, we had this cash offer, but this is the conventional. What do you think? And I said, we went over all the terms, and it was clear the conventional mortgage was so much better, so much better because of all the other terms. Look, when
occupancy, let's talk about those variables.
Yeah.
The other terms could be like you need to stay in the house for 60 days.
Yeah, you need to stay in the house
whatever
for
it is.
60 days afterwards. And how much are you going to charge that person? What kind of inspection period is there? What are they inspecting? Is it a pass-fail, or is it all the things? Are they putting down a good earnest money? Do they have a way out of the contract? What are the financing contingencies that are involved in the deal? And so you start to look at all these different variables, and sometimes you stack them, and one is way better than the other. Or maybe you can counter and you can say, look, I like this, and this, but I would rather have this, and this on these terms. There's probably 15 terms in the average contract. And if you just talk to somebody who just calls up and says one number, come on.
Yeah.
Like-
I want to hear, I want to stay on this topic because I do agree with you, Lisa.
Yeah.
Like, you hear it a lot. And
all the
even the
time.
buyers that get frustrated because you're talking to the buyers like, hey, this cash deal came through and we
The
lost
last
out.
minute, yeah.
248-539-9797. anyone in the industry, I need to know your perspective as well. What is it, Kat? Is it inexperience? Are you, what is it?
That's
in
what
your
I
mind,
think. I
is
think
it cash?
some agents just don't understand how to set it up and present it properly.
It's the same thing with people like, oh, it's a VA loan. I don't want to deal with
Right,
it. Like,
that's
what are you
not
talking about? That's our
ridiculous.
veterans. Like, they should
Yeah.
take priority over
Exactly.
everybody.
Yeah.
Like, come on now.
Yeah, 100%. Most people in the industry do not know the terms and conditions in the contract. They certainly can't speak to how they make a contract weaker or stronger. I mean, we're in an industry that last year the statistic came out, 73% of the agents that are licensed didn't even sell a home. So the average agent out there representing people have no clue.
What's going on?
They're Googling what to do here, and then they're reading the first answer off of Google or ChatGPT. They don't know. They
Yeah.
can't explain it to other people because they don't know themselves. So that's where, again, that professional team setup is really what you want.
All right,
Yes.
guys, we're up against a quick break here on a gorgeous Saturday in Southeast Michigan. I keep it here on 97.1 The Ticket. It's the Hardcore Mortgage, Real Estate, and Business Show. We'll talk a little bit about condominiums versus home ownership, the different fees of all, and the buying power that's involved. Keep it here. We will be right back. Welcome back to the show, 845. Nick Casteel joins us, Find New Keys Realty. I'm Harvey Freed, Becky Elliott to my right, Lisa Lawson. We're the mortgage people. 1-800-LOW-RATE if you want to find us, 1-800-569-7283.
Sorry, about to bust
You
out
gonna
with
sing
some
that?
Bon
I can also
Jovi.
sing you some Bon Jovi and all that. A lot going on, volatility in the marketplace. We talked about inventory. And then I threw in there as a little teaser that we talk about the buying power, condominium versus a home. Everyone, what do you say? Different strokes for different folks. So that's
yeah.
easy to say. Everyone's got their different things. Lisa mentioned at the break, she goes, had a client, divorced, you want to deal with it, but you can hire out someone to cut your lawn. No thanks. Condominium living, that's the way you wanted to go. Great. And then on the other side, home ownership has some advantages, and so do condos. So just as we'll talk freely about it there this morning. At least, no doubt, association fees, $400 on the average on most of these. They can go up. If the whole complex needs a new roof, you're paying. Need new roads and sewer assessments. Could be killer. But it's a lot of buying power. $400, Lisa, is about $600 a month in buying power.
Yeah, people don't realize that, everyone's...
I'm sorry, $60,000.
$60,000, I know.
$60,000.
Yeah. When you buy a condo, the association fee is included in your debt to income ratio. So
Right.
I always tell people, if they're like, I don't know, maybe a condo, maybe a house, and this is how I usually explain it. That's great. And then I send them 2 example estimates and 2 approvals. Here's your approval if you buy a condo, making the assumption your association fee is whatever we had discussed at the time.
Right.
Based on the sales price they're looking at. So we'll say, let's just say your association fee is $300 a month. This is what you could buy. Or if you buy a house, this is what it is. And they're like, well, I don't understand. Why is my pre-approval more with a house? Well, because I'm not including a $300 association fee.
Yeah.
Yes. Your insurance might be less, right? You might be paying $50 a month for your
Contents
homeowner's
806
insurance
policy, right?
Even the
For your
homeowner's
HOA
insurance is even that cheap anymore right now.
It's still cheaper though than
Yes,
a
I
single
agree,
property.
yes.
But I'm like, but that's completely offset by the fee. So they're like, oh, well, I didn't realize that. Well, I'm not going to find a condo I want for XYZ amount. And I really was thinking I was going to get more. Well, then we're looking at houses, and no, I used to own condos. It's not a big deal, but your equity appreciates a little bit slower usually. And if something happens in the market, like it previously did years back, you depreciate a little quicker. They're one of the first property types to get hit.
Yeah.
So if you're trying to build generational wealth for your family, I would say that I would look at a single family home or duplex or, multi-unit.
Yeah.
Even better. But
The other thing about condos too is just that, it's very important that if you are looking to buy, you disclose that is something that you are considering, because not only do you have to qualify, what Lisa describing is the property has to qualify as well, because as a lender, you're looking at it's attached. Again, the association can change. The house could be foreclosed on because you're not paying the association. If your neighbor needs a roof, guess what? You're getting a roof too.
Yeah, and they're going to assess you.
And now your $300 association now is going to be up to $750. That could make it so you no longer qualify for that home in 5 years. It's something that's beyond something that we can anticipate, because we have to be always looking down the road. And so when you're doing a condo, we ask for the budgets and who's managing the money. There's
Master
a million
deed,
different
bylaws,
things that go on behind the scenes when you're trying to purchase a condo, other than just the convenience of you don't have to cut your own grass and
So
do your
hire
own
service.
do your own snow. So it definitely
Good for
affects.
some and good for
Yes.
not good
Correct.
for others. I
Yes.
mean, and really, it goes back to just like when you talked about full disclosure, talking to you guys about like tell me everything that's going on. Tell me if you work.
Tell me about your life.
37 hours. Or
Yeah.
When you talk to not only on the finance side but on the living side of things, like okay.
And this explains a good listing agent, because nothing frustrates me more as a loan officer when I call the listing agent and say, hey, it says it's a condo. You don't have the property management company listed. Like, I don't want to have to hunt for that. I need to call them and ask questions on behalf of my buyer. Is this a warrantable condo? We're going to have a problem getting financing. Oh, what do you mean it's not warrantable? What do you mean you've had 4 deals fall apart because people can't get financing? You still have it listed. FHA, VA.
exactly.
I was like,
yeah.
What are you doing?
And they don't change their listing. And so people keep putting in offers. And I'm like, and I ask them, what's the point? I don't understand. You now know that this can't go. FHA can't go. Like, you know what I mean?
And
you
to
still haven't
break
changed
that
it.
down for people,
You're costing money and
What
wasting
Lisa's
time.
talking about is, you talk about a single family home anywhere in Metro Detroit. Your typical FHA, VA, conventional can write a loan on any of those. That's not the case with a condo. With a condo, it totally depends on the ownership of all the units. It totally depends on how well the HOA is being maintained and run. You don't have
Insured,
to you don't have to worry about that when it's a single family home.
Correct.
So there's all these other nuances when it comes to not only the ability to finance it right now, but the ability to resell it. Most people don't live in their home for 30 years. Most people live in their home for like 5 years. So guess what? You're probably not going to own that home forever, that condo forever. So also think resale value, right? And sometimes that can be fine for people. but other times it can't. Sit down, break it down with your experts so that you know what you got.
I'm glad you threw
I
that
just
in
wanted
there.
like a single family home is your typical neighborhood home. You're not in there's no association. Even if you do have
We're going to talk about that association.
Yeah,
Yeah,
so
we'll
like
talk
a
about
single
that.
family home is basically like your normal detached property. There's multiple different kinds. There's site condos and things like that, but that's what he's talking about. A condo, typically people imagine in their mind, it's like almost like an apartment kind of townhouse where it's attached to other people. Right. That's typically what when you hear condo, that's what you're thinking of. But you have to have the conversations and you have to be full disclosure on what you're looking at and what you're trying to get out of a property so we can direct the traffic with your agent.
And we
my
don't want to
mom has
waste
one
time.
of those, by the way, like a 4-unit condominium where there's 4 units. There's several hundred units in these complexes, but there's 4 units attached, and she has one of the end units, right? And then they're all across. These are condominiums attached condos.
Yeah, but doing
check
due
out. Go ahead.
diligence is so much more important because the other thing is, just like I had a buyer not that long ago. We try to do the due diligence. We try to get all the condo docs, right? And at one point, sometimes property management companies are on it. You get them right away. I've got one that says it's going to be 2.5 weeks, and my buyer's supposed to close in like 3.5. I can't wait to order the appraisal to get those, right? So we get the AOK, we order the appraisal, we got everything going. My buyer sends me all this stuff. Finally, when the condo docs come in, it can't be insured. It can't go FHA, VA, can't be conventional. It's a non-warrantable because of an insurance issue. They had too many claims as the association, and they were downgraded in insurance, and they didn't have full coverage. There was no, I won't get into the details, but there was a couple coverage clauses that they could not get for, I think it was 2 more years because of some claims that they had. That is a non-warrantable condo. So if you're not going in with cash or a large down payment, there is no 3% down non-warrantable condo financing anywhere.
Different kinds of non-warrantable condominium mortgages
Correct.
are
Yeah,
available.
there are.
Again,
We do have a 10% one.
We do.
do.
You can do 10%, but you
10%,
can't
no
do a
PMI.
3%, and that's what this person.
Yeah,
No, Becky, I was going to
You know what
offer
I mean?
someone a 10%. We found out that 60% of these units, there's a 20-story building in Florida, and 60% of them are owned by one individual. Again, that
Right.
made it where all of a sudden the loan to value couldn't be 90. It couldn't be a 10%
Right.
down.
So there's
It's
a
gonna
lot of these
require
are
a
the
little bit
things
more.
that doing your due diligence.
And let me just
and
explain
searching
that. So the
information
reason
with.
why, like, if one person owns a majority of the condos, it's a potential for high foreclosure.
There you go.
And that's why that makes it a non-warrantable, and that's why the financing becomes an issue because, again, everything that a lender does is to avoid a foreclosure or any kind of loss for a lender. And when we're the majority investor in that subdivision, we got to make sure that we are setting you up for success as the consumer. That is what it's all about, because your success is ultimately the lender's success when we are getting you to the finish line in home ownership.
All right. Don't assume, ask a lot of questions, because believe it or not, Nick, like we were talking about, take a cash offer versus a conventional. How about this? FHA loan limit here in Michigan, $500 on a single family. $524,225. Folks, FHA is not for some poor folks, okay, that are scratching. No. It's a very high loan limit because there's so many reasons why someone might have to get an FHA mortgage over conventional. And if the FHA offer is for more money, they want it more. Accept that offer.
Yeah, and we've been waiting for this for a long time. So these limits just jumped this year.
Yeah, they did.
And we are just so pumped about it because let me tell you, there are so many people in that boat. And FHA does not mean less qualified at all.
No.
So just
Money
to be,
is money at the end of the day.
Yeah, money is money. And if that person is vetted properly and that is the right loan for them, that's what you want. You want the right loan for the right person so that it's going to go through. And that's when, you work with professionals. And then, if we're listing a home, we always pre-vet. We call up the lender and we say, hey, have you looked at X, Y, and Z? Have you actually verified X, Y, and Z? Are they good candidates for this program? Why are you going FHA instead of conventional? Why are you going conventional
Those are
instead of
good questions.
FHA?
Those are fair questions.
And then guess what? When we are explained, they are perfect for this program because of this. And then, they might be the best candidate. And now they get the house over somebody else, and that's the best program for them. And they're not putting themselves in a financial strain that they don't need to be put in.
Well, I think sometimes people think, yes, you can get an FHA loan with somewhat bruised or less than perfect credit. But there's a million other reasons to use an FHA loan. Sometimes it's about mortgage insurance and the lowest payment and the lowest rate. For a while, FHA rates were slightly more competitive. So even though somebody might be putting 5% down and they might have a high 680, 690 score, the payment would be lower with FHA than it would have been conventional because the PMI was higher. You know what I mean? There's a million reasons. Like, we're trying to increase people's cash flow. So if the payment is lower and the rate is lower with FHA, why would I put somebody in a conventional loan? And it had nothing to do with having a credit issue in the past. It was just like,
Right. Maybe
Or even
this,
down
one,
payment
of,
assistance too.
right,
one
exactly.
of the spouses sometimes goes to a 1099 income. And again, they're still making that
Right.
money in the family, but we can't use husband and wife or
Right,
whatever
so
the
maybe the debt
situation
to
is.
income ratio is a little higher than
There
it
you
would have
go.
been if we could use both incomes. Million reasons. I don't want people to think it's an FHA offer, something must be wrong with them. No, sometimes it's the means to an end. We're always trying to put clients in the best position possible, regardless of the loan program. Whatever the loan program is going to work for them, get them closed, give them the least amount of, payment that they can and the least amount of money out of pocket if that's what they want,
And by the way, FHA, VA loans, which are, veteran loans, they get a bad rap because people are scared that, oh my God, these loans won't go through. Look, they are underwritten.
I don't understand.
What's that?
I said I don't even understand why that would even be a thing.
Yeah,
Right.
but it is.
Especially
But they have,
nowadays.
but they do.
Yeah.
And the thing is, they're underwritten just the same way. You have to provide the same proof. And the houses themselves, most of these houses are in good enough condition.
Sometimes those guidelines are a little bit easier to get through. That is a fallacy. They are not more difficult.
correct.
To be honest with you.
You guys, the fastest show in radio. There
Yes.
it was, the
Yeah.
Hardcore Mortgage Real Estate Business Show. Thank you, everyone, for listening. Call us at Capital Mortgage Funding. We'll hook you up with these great real estate agents.
Nick.
Of course, Nick. Nick Casteel. We'll hook you up with Nick.
Thanks for having me, guys.
1-800-LOW-RATE, the best mortgage banker. You can catch us all week long, all weekend long at Capital Mortgage Funding. Keep it here on 97.1. Tons of sports. We got Western Michigan tonight. That's right.
Go
Hockey
Broncos.
there you go. In the Frozen Four, the final games tonight. We got Pat Caputo. He's coming up with sports. Tiger baseball this afternoon. We'll see you next Saturday.